I'm Leanne Tinsley. I have the pleasure of providing you with a presentation today about OpEB that hopefully will assist you in completing the OpEB portion of your AFR when you file that next year. Todd, of course, mentioned that my title is Senior Professional Standards Compliance Officer. The standards that I focus on are those promulgated by GASB and the AICPA, which are auditing and accounting standards. I work mainly with our staff, providing them training and guidance on GASB standards that they use to determine the fair presentation of your financial statements when you are presenting what we call a GASB 34 full GAAP statement, and the AICPA auditing standards they use when we conduct your audits. I want to briefly discuss with you the GASB and its pronouncements to provide you a basis for understanding the questions that we are asking for in the OpEB section of the AFR. GASB is not static, and the pronouncements change. GASB is what we view as generally accepted accounting principles for state and local governments. These are developed by the Governmental Accounting Standards Board. That's where GASB, the acronym, comes from. Different entities use different standards. The private sector, including not-for-profit entities, use those developed by the Financial Accounting Standards Board, known as FASB. The federal government has developed their own standards from the Federal Accounting Standards Advisory Board, and some entities use those that have been developed by the International Accounting Standards Committee. When I am referring to GAAP in this presentation, I'm referring to those established by GASB. That is the standard-setting body for local governments in Indiana. When we audit you, we are assessing the fair presentation of your financial statements using GASB as a benchmark for this determination for those of you who are issuing full GAAP statements. GASB, as I said, does not remain static. The pronouncements can be amended or superseded. For OpEB and pensions, GASB has traditionally issued one pronouncement for the reporting, including note disclosures for the plan itself, and another one for the employer participants in that plan. GASB 57, however, is the exception to this rule. From 1990 to 2000, GASB 43 and GASB 45 established the accounting and reporting standards for OpEB plans. Those have both been superseded. In 2010 until today, we have GASB 57, GASB 74, and GASB 75 that are establishing the accounting and financial reporting standards that we look to. In these next couple of slides, I want to provide you definitions from these current GASB pronouncements. I don't expect you to memorize these definitions, and there's not going to be a quiz later. But I am providing you these as a common understanding of these terms is going to be necessary moving forward in accounting and reporting for OpEB. The first one, of course, is what is OpEB? OpEB stands for Other Post-Employment Benefits. These benefits can be anything. Traditionally, we think of insurance benefits that you provide former employees in the period after their employment as OpEB. These can be death benefits, life insurance benefits, disability benefits, long-term care benefits that are paid in the period after employment, and they're provided separately from a pension plan, as well as health care benefits paid in the period after employment, regardless of the manner in which they are provided. What this means is health care benefits paid in the period after employment are always OpEB, even if they are provided in conjunction with a pension plan. Those other benefits that I've listed, like death benefits, life insurance, disability, and long-term care, if they are provided within a pension plan, they are not OpEB. If they are provided outside of a pension plan, they are. I'm sure many of you know PERF provides a disability benefit, but that doesn't change PERF from a retirement plan, and nor are we expecting you to pull that disability benefit out of PERF and call it OpEB. OpEB does not include termination benefits or termination payments for sick leave. Termination benefits often look like OpEB, but the nature of why they are offered is different. Termination benefits are offered as an inducement to have that active employee terminate their service with you early. Termination benefits include early retirement incentives, severance benefits, and other termination-related benefits. Post-employment health care benefits include medical, dental, vision, other health-related benefits. Post-employment, of course, means the period after employment. OpEB plans are the arrangements through which OpEB is determined. The assets, if you have any, are accumulated and managed, and the benefits are paid as they come due. More definitions. Active employees, that's pretty easy. Those are those individuals employed by you. Inactive employees are those that are not any longer employed by you or their beneficiaries. Inactive employees can include individuals who have accumulated benefits but are not receiving benefits currently, or they can be individuals that are receiving benefits currently. Depending on how you structure your plan, there could be a time lag between when the employee leaves your employment and the time when they start taking benefits. Plan members are employees or their beneficiaries that are covered under the plan. Covered employee payroll is the payroll of those employees that are provided OpEB through the plan. Covered payroll is the payroll on which contributions to the plan are based. These can be different. Contributions, of course, are those additions to the plan for amounts from the employer, non-employer contributing entities. For example, a state may contribute to the local government's OpEB plan, or employees. We have different types of plans. They can be multiple employer-defined plans in which many types of employers many employers participate in one plan. A single employer-defined benefit plan is that type of plan where only the employees of one employer participate. A cost-sharing plan is where the employer provides OpEB through, let me start that again. These are hard concepts. An employer whose employees are provided OpEB through a cost-sharing multiple employer plan. And then we have agent multiple employer plans. And let's correlate these to something we're familiar with, which is PERF. If you will remember, in the past, PERF was an agent multiple employer plan, meaning PERF kept track of each individual participant and their employees, and the contributions made by Town A could not be used to pay the retirement benefits of Town B. IMPERS has changed PERF recently to a multiple employer cost-sharing employer plan, meaning the contributions of Town A can be used to pay the benefits of employer B because all of that money is pooled into one pot that can be used for everyone. When they were an agent multiple employer, each employer in the plan had a different contribution rate. Because IMPERS kept track of everybody separately, Town A may need to pay more than Town B because they're a little behind. But now, since it has switched to a cost-sharing plan, everybody's contribution rate is the same. You can think of OpEB plans in the same fashion in terms of multiple employer, single employer, cost-sharing, agent multiple employer. The plan administrator you may or may not have, that is a company that handles the administration of the plan for you, the sponsor. This is not an actuary. The actuary determines as of a point in time, which is called the actuarial valuation date, the service cost, the total OPEB liability, the related actuarial present value of projected benefits or OPEB performed in conformity with actuarial standards of practice unless otherwise specified by GASB. This will come to you in an actuarial valuation report. And of course, you can have a defined benefit OPEB plan or a defined contribution OPEB plan. Your plan needs to meet all of the criteria to be a defined contribution, or it defaults to being a defined benefit plan. When you have a defined benefit plan, of course, the benefits are defined by the terms of the plan. They can be stated as a specific dollar amount. The amount is calculated based on one or more factors such as age, years of service, compensation. It can be a type of or level of coverage such as prescription drug coverage or a percentage of health insurance premiums. When you are offering a contribution plan, you have an individual account for each employee, the contributions that the employer or the non-employer contributing entity is required to make, or the credits that they are required to provide are defined, and what that employee is going to receive in the post-employment period depends only on those contributions or credits, any earnings on those contribution and credits, the effects of any forfeitures made for other employees, as well as administrative costs that are allocated to that plan. Again, let's correlate that to PERF. PERF hybrid has two components, the defined benefit portion and the defined contribution portion, which used to be called the annuity share. You can think of OPEB defined benefit and defined contribution plans in the same way. One of the questions we received in the last AFR filing period was, health insurance is a defined contribution because you're paying a premium and that's all that they get, whatever that premium gives them. No, health insurance is a type or level of coverage that is a defined benefit plan. Okay, thank goodness. Done with definitions. Now on to what you're interested in is, why are we asking for OPEB and what are we asking for? As you know, in prior years, OPEB reporting in Gateway was requested by the DLGF. A legislative change moved this responsibility to the State Board of Accounts. This was done by IC Code 36-1-8-17.5. Our responsibility to gather information is set by IC 5-11-1-4 that outlines our authorization to determine the information that will be requested in the AFR. For these reasons, this information is now in the State Board of Accounts AFR, and the information requested is not exactly the same as that was requested by DLGF, as our focus is based on OPEB reporting established by GASB. On this slide, you should see some of the questions that we ask in our last AFR. Not all of the questions fit on one slide because I wanted you to see specific questions. So we'll look at this slide a couple of times. First of all, the name of the plan. That is the name that you give your plan. That's the name of your choice. It should correlate easily to your plan, so when we come into audit, we're not confused by, well, what plan were you discussing here when you filled out these questions? We're also going to ask you what benefits you provide. You can provide medical, dental, vision, you can provide life insurance, or you can provide other. Again, an OPEB plan is what you decide that it is, which makes this so difficult for a lot of people to identify. If you select other, type in a brief description of what other means. Some examples of OPEB are, universities allow inactive plan members to obtain college credits at a discount. That's OPEB. If you have a fitness center at your park that you allow retirees a discount to come in and use, that's OpEB. So it's so very hard to determine. We cannot give you a list of exactly what OpEB is because you get to determine what it is. Next, there's information for the plan administrator. Again, you may not have a separate plan administrator. The last question here is employer sponsoring the plan. Typically that is you, but if you participate in another government's plan or a number of governments gather together to create a plan, there is going to be one of you that's the sponsor. This may not be a common situation. Again, the plan administrator is not your actuary. Same slide, but we've moved back up to the type of the OpEB plan. We defined some of these types of plans on prior slides. The options provided here are single employer defined benefit, cost sharing multiple employer defined benefit, agent multiple employer defined benefit, and defined contribution. Here we ask for the number of participants. The number of participants should be the number as of the end of the fiscal year. And you may not have every category of participant. You may offer OpEB only to retirees, so you might not have active employees. You may require all former employees to determine immediately in the period after their employment ends to decide if they're going to participate or not. So you may not have any inactive employees that are not yet receiving the benefits. Contribution rates as a percentage of payroll was where we saw submitters having the most difficulty in the prior year. Let's go to the next slide where I have an example that I hope assists you in understanding what we're asking for and how to get this information to us. I have an example here. We have one employee. That employee makes $50,000 a year. That employee has accepted family coverage, which is $12,000 a year. You are paying 80% as the employer, which totals $9,600, and the employee pays 20%, which is $2,400. What we saw most often happening, people were trying to take the 80% and the 20% and put into these boxes, and that wasn't working. Because if you think about it, you're not spending 20% of 50, or you're not spending 80% of $50,000 to provide them coverage. You're only spending $9,600, and the employee certainly isn't spending 20% of their pay for coverage. So that scenario is not what's being asked for. What we're asking for is for you to make a calculation, and this calculation is taking your contribution of $9,600 divided by the covered payroll of $50,000 to come up with 19.2, which makes more sense. And of course, you will do the same thing for the employee. You will take the $2,400 divided by $50,000 to come up to 4.8. So as you can see, this is a calculation that you will need to make, and there is some correlation, of course, to the division of the premium between the employer and employee, but that's not what's being asked for. So I hope this clears up any confusion that we saw. In terms of cost method, this is the funding purpose that you have determined you will use to accumulate resources to be paying the liabilities for OpEB as they come due. These funding methods are determined by management or the governing body, and usually with the assistance of an actuary. I do not profess to understand all of these different funding methods because they are actuarial methods. Most often what we see is people do not accumulate assets for OpEB, but pay as you go, typically for insurance purposes. So you will need to determine from your plan administrator or the actuarial report what is your funding method. Typically, of course, we see pay as you go, but if you have any questions about that, you'll have to ask plan administrator, the actuary if you have one, or you can walk us through what's happening and hopefully we can help you with that. The options include unit credit, projected unit credit, entry age normal, aggregate, attained age normal, individual aggregate, frozen liability, individual level premium, etc. This next section, we have put together frequently asked questions based on what we saw in the last AFR filing period. I have left hopefully time at the end for you to ask additional questions. So if your question does not appear here, please wait, or of course you can submit those later for clarification. One of the questions we kept getting asked was, well, I don't pay anything. The inactive employee or retiree pays 100% of the premium, so I don't have an OpEB plan and I don't need to file the Gateway OpEB section. No, you will need to file the information asked for in the AFR OpEB section because regardless of the premium that's being paid, you made coverage available to these individuals as a benefit of their employment with you, meaning you're offering them a plan. The offer of coverage can be in a written policy, a labor contract, an employment contract, or it could simply be precedents due to standard operating procedure. And without you knowing about it, it may be costing you something due to something that we call the implicit rate subsidy. And let's just think about this for a moment. If you have older inactive employees in your pool of individuals insured, those older individuals typically access medical insurance more often and for more expensive procedures than your younger employees. So when insurance is looking at that pool of people, that results in a premium for everyone being slightly higher because they have to insure those older individuals. This is called the implicit rate subsidy. Everyone's paying more because those older individuals are in the pool. You do not need to know the exact amount of this implicit rate subsidy, and you will not be asked for it. Another question we got was, we don't have a separate plan for inactive employees. They stay on the plan that the active employees participate in. Again, they pay 100% of the premium. This can't be an OpEB plan because OpEB is for individuals in the post-employment period. No, this is an OpEB plan. OpEB plans do not require that coverage is only offered to inactive employees or retirees. Other benefits offered can cover the current employees as well, and often this is the case. There are, of course, some OpEB plans that are designed only to offer benefits to inactive employees, but it can include active employees also. Individuals ask us about OpEB and COBRA. Does COBRA qualify as OpEB? No, COBRA does not need to be reported as OpEB in Gateway. As you know, COBRA provides certain former employees, retirees, spouses, former spouses, and dependent children the right to temporary continuation of health coverage at group rates as required by law. This is not an optional plan designed and offered by the employer to the employee as a result of their employment. Another question we received was, we don't offer any of the benefits listed in the Gateway OpEB section, so we don't offer OpEB. No, these are the most common types that we could think of, but again, OpEB is whatever you decide. So we couldn't possibly list all of them. That's why you have the other option to click and identify what you are offering. People ask us about 403B plans, which are tax-sheltered annuity plans. Is this OPEB? No, it's not, because it is to provide retirement income. Retirement income is considered pensions and not OPEB. Is workers' compensation benefits OPEB? No, workers' compensation benefits are not provided as compensation for employment. You receive workers' compensation benefits if something happens during employment. So that is not OPEB. What happens if you offer your retiree a subsidy in the form of an additional monthly payment to be used for health insurance, but you don't limit its use in any manner? That is not OPEB, because you are not limiting to that purpose of buying additional health coverage. You are actually just giving them additional money. Then that becomes a pension. If you do the same thing, offer your retiree reimbursement for post-employment health costs, but you require that they provide you proof of healthcare insurance costs or direct healthcare claims that are not reimbursed by others, that is OPEB, because in that fashion you are limiting the benefit to providing post-employment healthcare. What happens when we convert our employees' unused sick leave balance to individual healthcare accounts at the conclusion of their active service? That's got to be OPEB, right? No, GASB has specifically pulled that out and said conversion of unused sick leave is termination payment and not OPEB. What happens if we offer healthcare benefits for 5 years to any employee with at least 25 years of service as an incentive to early retire? There you go. There's the intent, as an incentive to early retire. That's a termination benefit. That's not OPEB. Also, if you're not providing this post-employment healthcare benefits to anyone else, it's not enhancing existing OPEB. Again, it is a termination benefit. We provide disability benefits as a source of income until the recipient becomes eligible for pension benefits. Of course, the employee is required to retire to terminate his employment to become eligible for this. This is an OPEB plan, right? Yes, it is. These are benefits provided after employment as part of their total compensation for services. If it is provided through a defined benefit pension plan, like PERF does, it's a pension. If they are provided outside of a pension plan, it is OPEB. How can we have active employees in an OPEB plan? Because OPEB is for terminated, inactive employees and retirees in the post-employment period. Well, frequently, active and inactive employees participate in the same plan. Usually, people are allowed to stay on the healthcare plan. That makes it an OPEB plan. Also, your active employees can be earning credits or contributing accounts that will be used after terminating employment. That frequently happens in a contribution plan where the employee is accumulating assets for later use. I've already discussed how we can have inactive employees not receiving a benefit. That's based on your plan. You may allow them some time after termination to decide to participate in the plan, or there may be a time period where they cannot participate in the plan due to age. That's your plan. That's very possible. At what point in time do we determine our number of active and inactive employees? We have set that the end of the fiscal period that you are reporting for is the appropriate time to determine the number of active and inactive employees. Covered payroll also caused a number of problems. How do you determine what is covered payroll? That's going to be based on the payroll system that you have. Covered payroll is the payroll on which the contributions to an OpEB plan are based. You will have to determine what reports come out of your payroll system that you can use to accumulate this information, or the best method to calculate this amount. How do we determine covered payroll if our contributions are a flat fee per employee, not based on payroll? You would still use the payroll of those employees that participate in the plan. It is not necessary that a contribution comes out of that payroll. It is the payroll for those employees in the plan. Is covered payroll the net paid to employees, gross, or something else? Gross payroll is the appropriate amount. Is covered payroll only for employees that participate in the plan for the entire fiscal year? Nope. Covered payroll is any payroll on which contributions to the plan were based, regardless of how long the employee was in the plan. If the employees contribute nothing to the plan, is there covered payroll? Yes. Usually the employer is contributing something, and you would be using the payroll for those employees that participate in the plan. Again, regardless of whether there are contributions coming out of that payroll or not. What time period do I use for covered payroll? You would use your entire fiscal year covered by the AFR that you are reporting at that time. Contribution rates. How do I calculate a contribution rate if only retirees participate in the plan, as they have no covered payroll? In that case, you would have a percentage of contribution for 0 because there is no covered payroll. 0 is appropriate in this situation. If I have active and inactive participants, do I eliminate inactive participants' contributions from the calculation as they have no covered payroll? No. Include both the active and inactive participants' contributions in the calculation, although by definition, inactive participants have no covered payroll. We have different contribution premium levels for different coverages. Do I need to calculate different percentages for each level of coverage? No, we're simply asking for a single percentage for each plan and not each level of coverage offered in that plan. Again, what time period do I use for the contribution? You would use the entire fiscal period that is covered by the AFR that you are reporting. Lastly, how do you prepare for an audit of OpEB? Well, you would want to compile all of the plan documents that detail the benefits, how the employees qualify for these benefits, how premiums are determined. This could be the employee personnel policy or another separate document. It could be an employment contract. It could be labor union negotiation documents. If it is none of these and it is standard operating procedure, any type of written narrative of the plan, the benefits, and how they qualify would be very helpful. If you have an outside administrator, gather the contract with that administrator. Gather all of the periodic reports from that outside administrator. We would like to see the documentation supporting information provided in the AFR, of course. The reports you used from the payroll system, from HR, and the calculations that you performed, including how did you determine the active employees, the inactive employees or beneficiaries currently receiving benefits, and those inactive employees entitled to but not yet receiving benefits. We would want to see your calculation for the contribution rate as a percentage of payroll, which would be where did you get your contributions made by the employees, where did you get the amount of contributions you as the employer made, and how did you determine the annual covered payroll. Lastly, if you have an actuarial report, we would like that actuarial report, and we would also like to know what census data that actuary asked when they prepared your actuarial valuation. That is all that I had today. Now we are open for questions from you. Hopefully I didn't stumble over too many of the words. Some of these are hard to say.
Great, thank you so much. We did have some questions come in, some of which you answered already. So if we did not to your question, I believe you have answered it. First question, we have a collective bargaining agreement that allows a monthly contribution for a Medicare supplemental health plan after retirement. Do we need to report the future value for the retiree in Gateway for OpEB? We have a small force and the dollar amount per year is less than $12,000. Do I need to fund this in a liability account for future benefit?
The funding options are up to you. You are not required to pre-fund these, but if it is OpEB, you will need to report it.
Okay.
And if that's not the point of the question, please come back at me and clarify. I certainly want to answer the question.
Thank you. I'll move on to the next question. And if that asker was not satisfied with that answer, please let us know. We have a former fireman that retired at a young age. According to the law, we had to offer this employee the ability to stay in the group plan, but the retired fireman pays the entire premium. Do I need to report anything in OpEB?
Yes, you are offering an OpEB plan. I know I made the comment that OpEB is up to you to decide. However, in certain cases, state statute laws and regulations have these situations where you must continue to provide benefits past what we would call standard COBRA option to be on benefits. So yes, you are providing OpEB for this individual.
Great, thank you. When calculating total payroll for the year, how do you handle the introductory period, in our case 90 days, that the employee is not eligible to participate? Do you only include the payroll costs for the employees paid while active participants in the plans? The payroll earned during that 90-day period would not be included?
That sounds appropriate, yes. To eliminate that 90-day period because they couldn't have OpEB at that point, and you're not contributing anything based on that 90-day period, and neither are they.
We use the AIM Medical Trust as our health insurance provider. How would the medical trust be classified as an OpEB plan?
I'm not specifically familiar with that plan. If it is, for example, if it's a group that allows you to participate, that group should have an actuarial report that you can access. I hate to go further since I do not understand that. That may be something that Todd and Susan can assist with. We can look at further, but it would certainly sound like it should be an OpEB plan. Is it health insurance?
Yes.
It's health insurance. And so if I understand, or if I'm guessing, I will admit that if it's simply lower group rates because there's a pool of participants in it and retirees can stay on that, then that certainly does sound like OpEB.
Okay, thank you. And for that asker, we'll also just refer this to the MedTrust team and see if they can help you at all.
Yeah, that sounds like a very good question. Yeah. I knew when we went through this process in terms of starting to ask for OpEB, there would be situations and entities out there that we were unaware of and would have to look into to provide the appropriate answer in terms of what exactly is this, what's the nature of this arrangement, is it OpEB or is it not? So that certainly highlights one of those that we need to look at.
Great. Next question, if we offer terminated employees the ability to stay on the insurance coverage, but they elect not to. Is it still OpEB?
Yes, you're offering that plan. You may not have any inactive employees participating in it, but it is a plan. And it can change at any time you have an employee that leaves service.
Okay. We are a small town with a part-time clerk, about 10 hours per week. Are we required to offer health insurance?
I am not qualified to answer that question. That is a statutory question. OpEB, of course, is a GASB pronouncement in terms of how to account and report for. It is not a legal basis to say you need health insurance or you don't need health insurance. That's a Todd and Susan question.
Okay. Those are all the questions that we have received right now. Oh, is there an OpEB guide and gateway that describes the options?
Are you cut out there a little? Can you repeat, please?
Yes. Is there an OpEB guide and gateway that describes the options?
We do have information in Gateway. I don't know what particular options they were discussing. We try to improve that user guide at all times. If someone's looking at the guide and has a specific question they don't feel is answered, if they will let us know, we can try to beef up and improve that guide at any given time. We've also discussed recently, based on our last experience, adding questions and answers like I've done here in this seminar to try and get people through it as easily as possible. As you understand, a lot of times we don't know what others don't understand because we're so deep in the weeds, I'm sorry to say, that sometimes questions come at us from out of the blue that we would never have thought of. So we are always happy to assist by taking suggestions and comments about the user guide to improve the information in there for you.
Okay, thank you. Those are all the questions that we have now. So Todd and Susan, I'm not sure if you want to jump on to wrap this up or move on to the next one.
Hi, thank you so much, Leanne, for being here with us today and answering those questions. I know that there are a couple, Erin, that we have not answered yet, and Todd and I will try and do some research on that. If you could please send those to us, we'll try and get something by the end of the conference today. Is it time for our break yet, Erin?
We have about 10 minutes until the scheduled break, so I don't know if you want to take it early or wait a little bit if you have other things you'd like to cover.
Let's see. No, I think Todd covered everything in the opening remarks. What were the two questions that we had that we still have unanswered? Let me try those.
It was about the AIM Medical Trust in OpEB.
Okay. From what I know about the AIM Medical Trust, that is an offer of, it is a health insurance program, right?
Yes.
So you're offering a health insurance program to retirees. Is that correct? Is that what the question is?
Yes.
Okay, so that, Leanne, that is what they're asking, is for the AIM Medical Trust, since it's a health insurance program and they're offering that to retirees, and that would be included in the OpEB report.
Does the former employer contribute any, and it's only for retirees?
It's not only for retirees, it's a health insurance program that they offer to probably inactive and active employees.
Oh, and active, okay. I was trying to relate it to something else, and don't ask me why. I'm thinking the AARP plans, it's available to people, but it's certainly not attached to an employer. But
Yeah,
these can be attached to employers.
Well, we may have to ask more information about that.
Yep. And we'll connect you guys with
Okay. Yeah.
person.
Maybe we can talk to Lindsay or Matt about that.
Yep.
Okay. What was the second question?
We are a small town with a part-time clerk, about 10 hours per week. Are we required to offer health insurance?
I don't know of any provisions. That could be a good question for a town attorney, but I don't know of any provisions which require the offering of health insurance to employees. I know the statute says that the council may.
And those were the two questions.
Okay. I know Todd mentioned that a memo, if I can just change subjects for 5 minutes, unless there's any more questions for Leanne.
We did just have one more come in.
Okay.
Did I understand correctly that it is state statute that health insurance be offered to retirees? We don't really offer it, but since it is a state statute, is it considered OpEB?
I have to look that statute up, but I know there is a statute that does require that. Have you looked into that, Leanne?
No, I don't see why it wouldn't be OpEB. I mean, we're not talking COBRA where it's a short period of time. Correct? We're talking something else, a state statute.
Yes.
That if you have health insurance, you have to offer terminated employees health insurance.
Yes.
That would appear to be OpEB.
Okay.
Because even though, you're required by statute to do that, you are still setting up what kind of health insurance they get. What's the coverage, how much it costs. You're still in control of that. You're just not in control of not allowing former employees to not participate. And that's the problem we have trying to fit GASB into state statute. GASB often doesn't care about what states are doing in terms of statute. And sometimes it's not a pretty fit. Sometimes it is.
Okay, so we will take a look at that statute and we'll get some clarification on that, and probably we'll try to discuss that at our November meeting so that we can follow up with you on that. And we'll follow up also on the AIM Medical Trust question. We'll get some more information. We'll get with Leanne and we'll come up with something for everybody on that.
Right.
Todd, is there any more questions, Erin, for Leanne?
We have a health stipend that is split out over the year and is taxable. Is that OpEB?
If you are controlling how that health stipend is used, if you remember back there in one of the questions and answers, if you just give them money and say, hey, use it for health, but you don't control it in any fashion, they can actually go use it to buy groceries, then it's a pension, additional money for them to use. If you do control it by requiring that they bring a claim to you or evidence that it was spent for health insurance and you reimburse them, then it is OpEB.
Great, thank you. And then Todd and Susan, can you please remind us of the November and December dates?
Yes, we have a monthly meeting on our schedule on November 18th at 9 o'clock, between 9 o'clock and 11 o'clock Indianapolis time. And then on December 16th at the same time. And I'll send out a WebEx invitation to that next week. So you should be seeing that come into your mailboxes.
Great, and those are all the questions. So I'll hand it over to you guys.
Okay, Todd,
can I just put a comment in here? GASB is geared towards reporting and accounting. The whole goal of reporting OpEB is to show what the true cost of these plans are to your employees and former employees going forward. That's why it's not always an easy fit into statute. That's their goal. They're not trying to dictate to you what kind of plans you have to offer. They don't override statute and what you are required to offer or what you cannot do. Their goal is to what's out there, how much is it costing, have you reported it appropriately? That was my last spiel.
Thank you, Leanne. We appreciate Leanne very much. She takes a lot of very complicated subjects and explains them to us.